Good morning, everybody. Today is the third day in the month of February 2022. My name is Heritage Adisa, market analyst at HotForex. And quickly, we'll check through the market as usual, see what the dominant sentiment is, if the opportunities, how we can take advantage of these opportunities. But please do not forget that this is just a communication material, and nothing in this communication should be considered as investment advice or investment recommendation. Users acknowledge that investment in FX and CFD products is characterized by a certain degree of uncertainty, and that any investment of this nature involves a high level of risk for which users are solely responsible and liable. What we have this morning in terms of the overall market environment is a light risk-off environment in the markets. Yes, light because the ranges are very small, the moves are very marginal. As a matter of fact, FX, the moves are really tiny so far. Even equities have not moved so much, although we have equities starting lower, continuing from yesterday evening when we had earnings report from Facebook, that's Meta, right? It had disappointing earnings, failed to meet expectation with earnings, and even gave even a weak forward guidance as well, right? And then we had downside for Facebook shares, was down about 20% on that particular one. And then it also affected the general equity, the general index as the US 100, and by extension, the rest of the equity space. So we had that as one of the downside we have to start the session. FX ranges are small, like I wrote here. This whole week we've had, China lunar holiday. So from Asia, we've had that slower price move. That's why we're starting the session. Usually see for this week, you've seen more meandering price moves, right? And then today's session, we're also expecting the ECB as well as the BOE. So for now, European traders are also waiting for those key events, right? For more catalysts for markets. So for now, things are fairly light. Right now, from these two meetings, we'll talk about them in a bit, what markets expect and how we can look to play with them. But for equities, like I said, starting lower, US 100 is down. Oil prices, yes, yesterday we had OPEC Plus meeting, and then in the meeting as well, they also agreed to increase production by about 400,000 barrels per day. Normally, increasing production usually pulls prices lower. We saw a little bit of whipsaw price action there, but it has really simmered back. That's really simmered back in flat range. It's still holding above $85 per barrel, but we've really kept in a range for a while now. We'll look on there and we'll talk about it in a bit. In terms of cumulative strength and weaknesses, really marginal moves. USD, the strongest major currently, just up about 1.02% so far as I when I wrote this. And then we have NZD and then Euro. I mean, this is barely up to 0.2%. So that obviously tells you how small these moves are. On the weaker side, we have AUD pressured, but very tiny move, CHF and then CAD. Generally, really an overly, risk off, but mostly mixed environment, really, if we're going to put everything into context, really. On the day ahead, or in the day ahead, we're expecting the BOE, the ECB, as well as US ISM services, PMI. Now, let's look quickly at the charts. All right, so starting from the equity space, like I talked about, yesterday we had that downside flush in equities, right? This is US 100, and this is NASDAQ, obviously the tech stock, and then we can see it coming down on the back of that disappointing earnings, right? There was a lot of, from the earnings, I don't want to go into the earnings in depth, but we had a lot of a negative outlook for Facebook, where they talked about lower, display user per time, user per minute, and then even the earnings was even way below expectation. And then we had that weakness for Facebook. But because it's a major part of the NASDAQ, we also had NASDAQ also feel that pressure to the downside. And then equities generally also feeling that pressure. But what you can see here is the moves are still very, in today's session, really. I mean, this obviously tells you that there is not much going on just yet. Yes, keeps the losses from yesterday. Yes, down, on the day. If I'm mostly flat right now on the day, but started lower. But right now, there is still not much to work with so far in terms of the overall sentiment. I think from the ECB and the BOE would have a lot more to work with, and then we'll talk about them in a bit. A similar story across most of the major equities, right? For the US 30 right now, didn't even feel some of this pressure. Why? Because it's not really tailored towards tech, right? It's more about the industrial sector, and then we've seen it really flat in the day. But for US 500, that also has a lot of these names, we also saw that weakness in US 500. Now, what we can say about this, generally for equities, yes, we've seen a little bit of recovery for the month, really, coming from even late last week after making lows, right, around this key 42, near 43 level, really. Now, overall, we are still pulling back from the downside we've seen in terms of Federal Reserve expectations, and now we are back at this key round number around 45.50. Now you can see was key support levels going back a couple of sessions, and now we are back here. What do we expect going forward? Now, the reason why we've seen recent upside here is markets have, or expectations for Federal Reserve rate hikes has already been priced in, which is what we saw, coming from throughout the month of January. Apart from that, even the tensions with Ukraine and Russia has also more like been pricing about markets as well. That's what we've seen, some form of recovery. But as the days go by, if we get more tension from that particular end, or we have more, more hawkish talk from Federal Reserve members talking about maybe 50 basis points hike in the next meeting, or even up to 3, 4, 5, let's say 4 or 5 hikes for the year 2022, that would obviously pressure equities even more. But another reason why we've seen that slowdown really in equities is global economic recovery has also seen a little bit of slowdown in terms of expectations. And markets are really being cautious about recovery. Inflation is coming really high and hot, and then growth is really slowing. So there's that to also be very attentive about. But for now, I think we're going to take the sessions day in, day out. In terms of longer term biases, it's going to be a little bit of more patience in terms of trying to jump in. But just take it day in, day out, look at current sentiment, pay attention to sentiment, as well as, yes, the overall macro outlook, but more importantly, sentiment will be more of a driver in terms of going forward, even towards the end of the week and later in the month of February, right? From the oil side, like I was talking about, like I said, really, really, really nothing here so far. We've really kept this range for a couple of sessions, right? This was where we had the OPEC meeting yesterday. We had our initial spike to the upside, initial drop to the downside. I mean, just says the market are really indecisive just yet, waiting for something more concrete to work with. We need clarity from the Russia-Ukraine story there, and then clarity when it comes to inflation, right? Because oil prices keep being higher, obviously increases inflation, and that's not good for central bank, because they want to hike rates on the back of that. Really bad for equity. So there's that to also pay attention to. So right now in the markets, there's a lot of moving parts, and we just need to be very, very, very not so much in a hurry in terms of trying to jump in things. There are more clearer biases to work with, right? We'll talk about some of them now in a bit. For the dollar index, right, in today's session, we've just seen a little bit of stall from the downside that we've seen this month, right? And then obviously that tells you the kind of environment that we are seeing from late January really till the end to currently this month, this week really that we've had a downside. Why? Because we've seen equities push higher. We've seen markets already pricing in Federal Reserve hikes, more or less seeing more reprieve from the particular aspect. But right now, we're trading really back towards this 50% retracement level, looking at measuring from the lows coming back. I'm going back to January 13th, thereabout. Now, for now, I'm still being very much prudent here. I want to see what the Federal Reserve say. Yes, we're expecting them to start to tighten. Markets are already expecting them to hike by 25 basis points in the month of March, the next meeting, right? That was already priced in the month of January. So going forward, what do we expect? If they keep because we've had hawkish members come up, we had Boosty, we had Daily as well, come out being more hawkish, talking about hikes going forward. Now, if those comments keep coming in, because I expect further upside for the dollar, because the Fed should hike, they should tighten policies even faster because of the problem of inflation that we have so far. So if we keep having that, obviously dollar index should push higher. And I like the level that we're trading in right now. I mean, we are now at lower levels. So obviously I would like to pay attention to these key support levels around here, probably starting with the lows around 95.7. That will be interesting to pay attention to. But obviously, I would like to see how these play out going forward. But for now, in terms of today's session, short-term biases, being more patient is a way I'd like to take this, right? One more for the VIX, right? Like I said, for the month of January, from late January back into February, we've seen equities push higher. We've seen VIX come low as well. Right, the downside we saw in equities, especially the US 100 and the US 500, yesterday saw VIX jump higher late yesterday. But for now, in today's session, really, those moves have really, really just eased. And we're seeing a little bit of slowdown in the moves that we have so far. Now, going over to the FX space, like I said, the moves are really marginal. Yes, the dollar is leading the FX majors, but even with that, it's still small. The major thing that I want to pay attention to in today's session would be the central bank meetings, right, from the BOE as well as the ECB. Is it okay? So BOE first, and then the ECB later. Now, first starting with the BOE, let me open up the chart and then we can look at the pound against the other majors. All right, I think this is where I have the pound. Okay, pound here. All right, so let's open up pound. Total the pounds. All right. Now, from the Bank of England, markets already expect them to hike by 25 basis points. That's about 0.25% in their meeting today, right? That takes the rate to about 0.5% already. Now, that has already been priced, right? I want this to load up so I can show you, what to expect, and then the currency pairs that we need to look out for if they give us any one of these expectations that we're looking out for. All right, why is it taking so much time? Sorry about that. Okay, let's look here then. That is taking so much time. Let's see what we can get from here. Okay, we're back up. Now, markets have been pricing in this, expected rate hike for the Bank of England, right, coming forward. You look at currency pairs like euro, pounds, we've seen it push lower in recent time, right? In recent sessions, right? Yes. Now, if they come out hiking by 25 basis points, that wouldn't be enough to see further strength in the British pound because markets have already priced it in. What we need to see is what they say going forward. Are they saying anything like tightening would even push higher even forward, like going forward we'll get more rate hikes, or they're saying that the concerns on inflation are even very, very much, and then we'll look to tighten policies even further, right? Not just hiking by 25 basis points, 0.25%, that wouldn't really be enough. But if they come out being overly hawkish, hike, and then say we're expecting more hikes going forward, that would be good for the British pound. How I'd like to play this, yes, we'll talk about the ECB, but I'd like to see further downside on the currency pair like euro pounds, right? First point of call for me here would really be back towards the 0.835. When you look at this level, I already have one trade running from this one already to the downside. I took it from, I think it was on 31st of January thereabout, from this key round number around 0.835, right? I got in around here, and then we've had first push to the downside, we had another retest, another push to the downside so far. I still have that running for me, but right now, if we get the BOE come out being more hawkish, I expect further downside on this particular pair. If apart from the rate hike of 25 basis points, they tell us more rate hikes are coming forward, or the stress inflation really being high. As a matter of fact, inflation is really high right now. Right now, the current inflation print is about 30-year high, which is already high enough. And there's still a lot of supply constraints, still a lot of concerns when it comes to even energy prices from the UK. So all of that is a worry for the central bank. And if they see inflation as being a major worry, hike and then tell us that they could hike some more, I expect to see further downside from here. So what I'd like to see is retreatment towards this level, and then from here looking to push downwards on the particular one. I would really look out to this key support level as a point of exit on this particular pair. Now, for the ECB as well, obviously they need to also come back in line. Obviously not high, not come out hawkish, stick to their overly dovish tones. Obviously that would really help this see for the downside on this particular one. Apart from this, I would like to also pay attention to currency pairs like pound versus NZD. Now, you look at pound NZD. NZD has been weak recently. Yes, the central bank has been hawkish, but in recent time, the currency itself has really just been pressured really for a while now. You look at how it's been trading for a while. It's really, really been weak against currencies like the British pound. Now, we are already at the highs. So obviously, I wouldn't want to be jumping in buying at the highs. But if we get the BOE come out more hawkish as well, that could really provide more pushes to the upside on this particular one, especially in the adverse risk environment that we have so far in today's session, which obviously should pressure NZD more than the British pound. So what I'd like to see from here as well be an further push to the upside. Right now, we are already right now we've broken above this key round number around 2.045, right? You look at it, yes, it's the high, so I'm really, really, really picky with this, but it's also one on my radar. I want to also point out, to us, what I like to see would be further pushes up from this particular level if the BOE comes out being more positive, more hawkish on that particular front. So there's that to watch out for. And one more, pounds JPY, although this one, because of the adverse environment that we're starting the session with, it makes it a little bit tricky, but I expect, the BOE coming out overly hawkish. I'm not talking about a 0.25 basis points hike alone, but being more optimistic going forward about rate hikes and monetary policies. I would like to see this push higher even more. Right now, we're contending with 155.5. If you look at this level as well, also an interesting one going back a couple of sessions, going back to middle of January, around 12, 13, 14 of January, as well as late December, thereabout. So I like to see us clear out this level. But obviously, if the BOE disappoints, comes out just hiking by 25 basis points, or even worse, not hiking at all, downside from here would be an expected way to go. So there's that to pay attention to, and then we have that on the radar for the BOE. For the ECB, it's interesting because markets have been talking about inflation for Europe for a while, for a bit now. But the truth is, the ECB have still been on the transitory side, saying things like they expect inflation to still be transitory, and markets, some of us, some analysts really expect that to still be the theme and the tone from the ECB, right? They've always said inflation is transitory. I don't expect them to take a pivot and just change right now. Yes, with the Federal Reserve taking action, central banks would like to align themselves. But even with that, I don't think this is the meeting where they should come out overly hawkish, especially with the supply constraint that we have around, everywhere that we, and the slowdown in economic recovery that we're seeing so far. Now, if they come out disappointed, I would really, really like to see Euro USD push lower. Really. And the reason why I like that is, first of all, we've seen a lot of push higher in terms of this month, as well as even late last month on the back of weakness in the dollar. But this has pushed up enough. Apart from that, we're also seeing we're currently trading very, very close to this key level. You look at this range that we had recently, right? This is also a range we're seeing on USD index, right? Now we're back in this level as well. Apart from that, if you look closely here, we're also trading back to this overall support level. Just seeing how we can show us this. You can see 1, 2, 3, 4, 5, and now we are back in this region. Yes, it's not the cleanest, it's the middle of the range, but if you get the ECB disappoint market or disappoint those calling for hawkish tilt, obviously you want to see this more to the downside. But my preferred option would be pound versus euro versus the pound, right? On the back of both central banks. I wouldn't look to jump into this. I've already mentioned how I like to play this out. But what I would like to see really would be a more disappointing ECB and then more hawkish BOE. If you get that, obviously looking for further downside on this particular one from this key round number around 0.835 would be a way to go on this one, right? That would be what to pay attention to. Until we get these central bank meetings, I expect markets to still remain in a very, very slow trading environment. We expect to see more ranges so far, and then from the meetings, I wouldn't jump in on the back of the meeting. Remember, we also have press conference, so we like to hear what they have to say as well going forward. It's not just about what they do at the meeting, it's also about what they say after the meeting. So that will be very interesting for us to pay attention to. Apart from that, we're expecting, yes, jobless claims for the US, right? But more importantly, we're expecting ISM services PMIs for the US. Yes, we're expecting to be in, expansionary, region, but still weaker from previous print. So that will also be very interesting to pay attention to, all before NFP later tomorrow. So we're going to leave it at that right now. For now, sentiment, yes, light risk off, but overly mixed. Ranges are very, very marginal. It could continue until we get the key meetings from the BOE as well as the ECB. And from those meetings, we're expecting the ECB to come out sticking to the guns, still keeping dovish, nothing really exciting. But from the BOE, we're expecting them to come out more. It's a high rate first of all by 0.25%. But more importantly, whatever reactions we're going to get would be if they come out being overly hawkish, expecting more rate hikes going forward. So we're going to leave it at that. Thank you very much. If you have any questions, please do not hesitate to ask, and we'll always do our best to help. Thank you. Do enjoy the rest of the trading session. Bye for now.